This morning on BRN, tariffs could raise your car insurance. Joining me now to help break it all down, Ray McGrath is a car enthusiast. Ray, always great to see you. Thanks for joining us on the program this morning.
Oh, thanks for having me, Jeff. And I know you're a car enthusiast as well.
Yeah, when it comes to driving, I can drive a little bit, and pumping the gas for my wife, I always, that's the level of my enthusiasm. Ray, we always have you on to opine on the latest car-related issues. An issue that I wanted to talk to you about, and we've talked to you before, is about car insurance. Now, coming up in April, it potentially are some tariffs, reciprocal tariffs on Mexico and Canada. Could this have an impact on car insurance rates?
I think, depending on how long the tariffs are in effect, and I know I say that because, one day they're here, one day they're not, but yeah, if they're on for a long time, sure. And it wouldn't be just those three countries, really. April, not the first, but the second, right? It will theoretically go to a much broader list of countries. So, but I think as far as auto insurance goes, typically, I think I'm not an actuary or anything like that, but they look at their experience at the end of the year and their costs, and then the following year you'll start to see an adjustment in prices. So yeah, I do think if especially if they're on for a while, we will see it eventually show up in car insurance.
Now, when you unpack, you made a really good point about experience. When you unpack the price of car insurance, it's based on a lot of different things. Obviously, the number of accidents that happen within the insurance pool, but also the cost of replacement parts. These tariffs could increase, at least in the short run, parts like fenders, bumpers, a whole litany of issues, of parts that we may source from either Mexico or Canada.
Oh, most definitely. But also a lot of auto insurers, they source a lot of parts from previously wrecked vehicles. So there's a whole supply chain of lightly damaged cars, like maybe a Tesla with a total battery has a good nose, so they can repurpose that for another customer's car. But yes, to your point, Jeff, very true.
So there are salvage yards, I guess, here. And I think, when you go out to repair your vehicle, you like to refurbish older vehicles, traditional, like the Ford Mustangs of the world, so traditional classic cars. So you have a lot of expertise in going out and sourcing some of these parts. So there are salvage yards that the car repair companies will go to in order to find parts first. Is that like the first tranche or the first tier?
Yeah, think of it this way. If you have a 4-year-old Nissan and you need a hood, well, Nissan will probably charge you $1,000 for that hood. But with the advent of this internet, you can, as a repair shop, you can go online and find salvage yards that have that Nissan hood in perfect shape and get it for a third of the price. So auto insurers do recommend that low cost option because they're also concerned about their bottom line. So there's a whole industry, we used to call them junkyards, but that's mainly for junk. These cars are rebuildable or salvageable, or they have a lot of life left in their parts.
Now, Ray, so what you're describing, so let's talk about the economics of this. And by the way, neither of us is an economist, but I think, we understand basic supply and demand. So if the source of parts now becomes the salvage yards, we've got tariffs driving up the cost of parts from Canada or Mexico, and people start going to these salvage yards, couldn't that drive up the cost of parts because there's more demand and the supply? I guess the supply potentially could increase because people are getting accidents, knock on wood, all the time. But wouldn't that increase potentially the price from these salvage yards?
Oh, most definitely. Yeah. And, it all comes down to supply and demand and how everyone's looking to maximize their rate of return, even the salvage yard, even the insurer. And it's a great point, Jeff. I mean, if the supply chain is constrained and prices are high, and the salvage yard is aware of that price differential or that delta, as you might want to call it, they'll charge more because they know they can get more.
Right. So it's in their interest. I'm just trying to play it through again, not an economist, but just thinking it through. They can react to the demand, and they can raise their price. Instead of it's like 50 cents per pound or per ounce. I don't know how they price, but they can drive up their prices subtly but not enough to match the tariff cost of the part, a part that's subject to tariff.
Yeah, years back, I used to be very frustrated. I would buy motorcycle parts, and before the individual would tell me what the price was for the part, he would look up, oh, well, Honda's charging $400 for this, so I'll sell it for 300. I'm like, wow, I know it costs you about $1, but whatever. Very
Yeah, I mean,
frustrating as a consumer, but everyone's got costs and expenses to cover.
so what's a consumer to do? I mean, there are obviously don't get into a car accident. That's, I guess, number one. But when it comes to car insurance, if in the future, because car insurance rates are, I believe, are set at the state level. There's a national organization, but they have to go through the insurance commissioner. What's a consumer to do in order to keep their cost of insurance down?
Yeah, I don't know if the consumer can do much because obviously the regulators work with the insurers to make sure they're not being overly profitable. But at the same time, yeah, I mean, it sounds nice, avoid an accident, but the reason it's an accident is because it happens unintentionally, right? But
That's
uh,
true.
there's not a lot. I mean, look, the average car price has gotten so high, and so if a car now costs $45,000, the insurance still can't be $1,000 a year, just because you're driving a much more expensive and technologically complicated vehicle. So everything is kind of in lockstep.
Yeah, I guess, Ray, when you're out buying a new car, and when I say new car, meaning new to you, so it could be a used car or it could be a brand new off the lot car. One of the things you probably want to factor in, even more importantly, is the change in car insurance. You probably, as you're pricing out the vehicle, and to your point, it's 45,000. The Honda Accord is now whatever it is, $35,000, making it up. I don't know the answer. You want to make sure that you understand the cost of car insurance because you have to factor that into your budget. You don't want to buy a car that you no longer can afford due to the cost of insuring the car.
Right? I mean, part of the reason we see older pickup trucks that are in good shape selling for above market or theoretical market values is you buy a new truck today, and if you're going to use it as a work truck, you really want to get in a truck with all these fancy touch screens and you're in your work boots and covered in mud or manure, what have you.
Manure. Okay.
I mean, some of these trucks really, I think some of the manufacturers with their high-end vehicles have lost sight of the average consumer or who their target audience is. So
Yeah, I mean, listen, as we're talking about this, we're talking about the economics. The consumer, you, me, everybody buying a vehicle, everyone buying, I mean, they're just they're twisting in the wind right now. Yes, I mean, the price of eggs have come down. The price of gasoline had come down. I think it just started to tweak a little bit back up, perhaps. But when it comes to buying vehicles, which are very important because most people are not working remotely anymore. A few people, some are, but they have to drive their car. So, I mean, they're going to twist in the wind if they have to get their car fixed. They have to get a replacement part. They have to buy a new vehicle. They're going to really feel it, potentially.
yeah, and with I know we don't talk about inflation or the cost of living a lot, but it's all factored into insurance. It's all factored into car prices. And hopefully, we're getting better compensated for our work, but it's a rising rate. It's a rising tide that's lifting all expenses, unfortunately.
Yeah, Ray, and not that. Well, I was going to ask you about interest rates. I mean, interest rates. You mentioned inflation. Interest rates kept steady. The Federal Reserve chairman said that I think it's now he termed the inflation transitory. I guess it's kind of a wait and see what the impact of steady rates will be on the average consumer.
Yeah, I mean, the Fed did say they were going to potentially have two more rate cuts this year. First one maybe in June-ish, but things change so much now. I mean, just like with tariffs on aluminum, right? I mean, it's here today, gone this afternoon. And I think the Federal Reserve hedged all their their language about where they think rates or borrowing costs will be, because just so much the impact of tariffs on the economy and just all the uncertainty as we're seeing in markets today. It's just been it's been difficult to price a lot of these products.
Yeah, and that volatility. I mean, if you're the consumer and you're saving for a house or saving for some big purchase down, it really is. It really is hard on us, the consumers, to deal with all the volatility and all the change. Ray, we're going to have to leave it there. Always great to connect with you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
All right, glad to be on of service. Sorry, thank you, Jeff. Bye now.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website, and your subscription helps support all this great BRN content. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.